it's Fred Arnold, American Family Funding, with some headlines for the week. Number one, consumer prices are very muted, very quiet, which means the cost of things when you go to the store have really kind of stayed flat. That's really good for inflation and causing interest rates to stay low. It's not good if you want a more vibrant economy, but it's good as far as interest rates go. So we're going to see a prolonged period of low interest rates. Now, have you not noticed though, if you've gone to the store, there's less products on the shelf? If there's less products, it might cause a little bit of inflation because there's not an abundance of things to buy. Look for that over the next couple months. Next thing, stocks have rallied recently because of a potential vaccine for COVID-19. Why is that important? Because then the economy can open up and businesses are going to flourish and people are going to start producing and we'll be able to get back to full capacity at work if that is the case in 2021. At the soonest, I think it's going to be at the end of spring 2021. As an Ironman competitor, I don't even think we're going to race in the springtime. I think it's going to be around the summertime when things start to open up. Just a personal opinion anyways. Next item that we have here, and that is jobless claims fell by the most in the last 5 weeks to a 7-month low. Now, that's great, right? Less people filing for unemployment. Well, there's a caveat to that. Well, in California, you only get so many days off or so many months of getting unemployment until you fall off the rolls. So if you fall off the rolls or you stop seeking employment because the jobs are gone, well, then unemployment's going to drop, right? Because it doesn't count those that no longer are looking for work or no longer filing those claims. So I think if you will, the service industry and those on the lower economic level, if you will, travel, that's going to be impacted for years to come. And so we have to, as a society, figure out ways to retrain those, get them into an industry they love so that they can take off when the greater economy takes off. One last thing I want to talk about. Median price. Oh my Lord, the media is going. The median price increased by 12% year over year. What are we going to do? Well, remember, the median price is half the homes sold below this price, half of them sold above. Well, if more homes sold that were more expensive, it's going to raise that median price. Doesn't mean that every price went up by that amount, but it's going to raise that. And what we're finding is there's very few homes for sale on the lower end, and there's very few developers and builders building on the entry-level housing because it's so expensive to build a home. When it's expensive to build a home, you're going to build a bigger home, get more money for it, therefore be able to make the right rate of return that you're looking for as a business. So the truth is, we're seeing home values throughout the country go up around 5.5% to 6%, not the 12% the media is going to freak out about and be really worried about. So not only that, interest rates have stayed low, which has really helped affordability because keeping payments low, even though the houses seem so expensive, the payments are a little bit lower. So I hope you enjoy this informational update at the end of the week. Happy Friday the 13th, and we'll talk to you soon.